Hello, hello. How's everybody doing? Audio. Nope. We want this. You hear me now? All right. So, how's that, guys? Amber, Rebecca. Okay. So, the best real estate investment. All right. So, the best real estate investment, it's hard to give an exact answer on that. Because there's many different types of real estate investments, and all of them can be good. So, what we're going to cover today is a few different types of ways to invest in real estate, why I like them, why I dislike them, which ones I think are good right now, which ones I think are not so great right now, and we're gonna dive into it. So, why don't you guys tell me different types of real estate investments if you can? Comment where you're at, different types of real estate investments, and your favorite real estate investment. Is it, and this could be many different ways, right? Like someone commented multifamily, but we're also talking about flipping houses, buying holds, seller financing deals to an end buyer, could be investing in real estate notes. There's all different types of asset classes of real estate. And then also, too, there are different types of ways to invest in those asset classes. So, what are your favorites? Which ones do you do? Which ones are you finding success in right now? Which ones are you in fear of? Airbnb, another one. Yep, that's correct. All right, so let's start let's start with the basics, and then we'll start going into the to the asset classes, right? So cross out the test. All right, so one of the most familiar ones is buy and holds. I hope you guys can read that blue. All right, buy and hold, flipping houses, or properties. Buy and hold, flipping. If you had to choose, which one would you do? Now, buy and hold is the way that you are going to truly build wealth in real estate. Now, you get all the benefits of real estate when you buy and hold properties, right? That's the way to build wealth in real estate. That's the way you get to maximize your investment. Flipping houses is, it's good. You get quick cash, you get in and out of some deals, but you're not going to build wealth flipping houses or even wholesaling deals. And anybody who is flipping houses and wholesaling, it's good. You should flip houses and you should wholesale and you should stack up your cash. But what you should be looking to do is to take that money and go invest it in some buy and holds that will pay you for a lifetime. Now, y'all probably heard me talk about it before, but the reason you want to hold on to properties is for many reasons. First and foremost, you can utilize leverage, right? You're not buying these properties cash. You could, but you can also get debt on them. So when you utilize the leverage for the properties you're holding on to, you put 25, 30% down on a property, and you get to finance the remaining 70, 75% of the value of the purchase price. Now, the reason you would do that is you're maximizing your investment, right? If you buy the property cash and you gain, let's say, $50,000 worth of equity, you're gaining that $50,000 worth of equity through appreciation based on the money that you put into it cash. Now, if you only put 25% down and you got the remaining 75% financed, then you're gaining that same $50,000 worth of equity through appreciation based on your 25% down payment. So there's power in that because you're not putting up all the money to gain the money. And utilizing leverage is a good thing. I think our marketing department posted a post the other day about how debt's too expensive and you should be buying properties cash. I disagree with that. I don't think you should. I don't think that debt is too expensive. I think that you just need to find investments that'll help pay for the expensive debt. I don't think you should be buying properties cash if you can find good leverage and good properties that will pay for that leverage that you're getting on the properties. So I just wanted to squash that real quick. So buy and holds, you get to utilize leverage. Another benefit is you get cash flow on a monthly basis if you have a good property, or quarterly, semi-annually, annually, you get cash flow. You can utilize depreciation. So you get to offset that cash flow that you're getting via depreciating the asset. You only get to do that when you're holding on to these properties. If you don't own the property, if you're selling the property, you do not get to capture the cash flow over the long run, nor do you get to capture the depreciation that you get from holding on to it. Some other benefits for buying and holding are the income that you are getting is passive income. So if you're not a real estate professional, the passive income that you're gaining from this passive investment gets taxed at a lower rate than your active income does from your W-2 job, for example, or flipping houses, for example. The passive income over the long period of time is taxed at a lower rate, but hopefully you're not paying any taxes on the income that you're getting from the cash flow due to the operating expenses and depreciation that you're utilizing to offset it. And last but not least is leverage again. Once you hold on to this property for a couple of years, 5 years, 10 years, and you gain a substantial amount of equity, you can get another loan on it, utilize another debt instrument, get a cash out refinance, get that cash back, and go reinvest it. So buying and holding is really the best way to capture all the benefits of owning real estate. I do think that you should flip houses. That makes sense. and you don't want to hold on to them for buy and hold. And I do think that you should wholesale houses or properties where it makes sense that you don't want to buy and hold, or if you need the cash to go invest in a buy and hold, you should utilize all the strategies. So there's not one better than the other per se. It's situational, and it depends on the deal, depends on many different circumstances that surround the deal, your business situation, and everything you got going on. But you should always be aiming to buy and hold as much real estate as you can, because that is where all the benefits come from. Now, we've talked about it a lot, but right now, some of the deals that we're looking at and looking for are deals where we can take over somebody's existing mortgage. So there's a lot of people right now who need to sell their house, and they'd be willing to sell their house, but maybe they're not able to get the price that they want for their house because the market has shifted. So what you can do is buy this property from them, take over their existing loan, start making payments on that loan, and what you'll end up getting, hopefully, is a lower interest rate than you would in today's market. So, for example, we're looking for these types of opportunities. We're looking for unique opportunities where someone is in a situation where they can't sell their home or property for what they want, which is apparent in all different asset classes right now. I mean, there's a lot of people who've got, if we're talking about commercial multifamily, there's a lot of people who have commercial properties right now with their loans expiring in the next couple of years. They might have adjustable debt on it, meaning that their interest rate is going to fluctuate depending upon what the current interest rates are, which they're much higher than they were 2 years ago when they probably bought the property. So there's a lot of people who need to sell their properties. They've got loans maturing coming up, and they're not going to be able to sell them for what they need to sell them at, or for what they want to sell them at, due to the cost and debt, due to the market, and due to many other factors that are apparent right now. And so you can find this stuff in commercial real estate. Now, if that's the case and somebody's loan is maturing here soon, you're not going to be able to take over their debt. It's the reason that they have to sell the property. But what it does do is it presents an opportunity for you to potentially buy this asset at a much lower price than they'd like to sell it at, because they have to. They have to sell it. They're probably going to end up losing money. Or, breaking even is a good scenario for them. Unfortunately, they just bought at the wrong time. They made the wrong predictions, and they're kind of in hot water right now. So those types of opportunities exist. Some other opportunities exist where, someone bought a house, and let's say they secured anywhere from like a 3% interest rate to, I don't know, even we'll just call it 5% interest rate. They secured one of these 3 to 5% interest rates a couple years ago, hopefully closer to the 3, and they've got a principal balance on this loan. They need to sell this property. Maybe they paid for way more for it than they should have, and they're in a situation where they're willing to just walk away from this property, have you start making the payments moving forward, and either maybe they get some cash at closing, a little bit, maybe they walk away with nothing. We had a situation where someone actually ended up bringing cash to the seller, brought cash to closing so that they could pay the 2 real estate agents, and they agreed to pay part of the mortgage payment for the next 3 to 5 years or so. So it's kind of the Wild West in the way that you're able to get creative and structure these deals. But we're looking for things like this, where people are behind on their mortgage, they need out of a situation, and they're willing to just walk away from the deal, let us take over, let us start making the payments moving forward. And the reason that we like this is, for a few reasons, right? If you're able to do this, number one, you're getting an interest rate that you likely wouldn't be able to get otherwise right now. Secondly, hopefully there's some equity in the home that you're walking into. Third, you're saving money on costs. If you take over somebody's existing loan and you just start making the payments moving forward, someone tell me how you're saving on costs. Where are you going to save on costs by doing this? By not getting a new loan in your name. Someone has to know the answer. TikTok, Instagram. How are you going to be saving money on costs when you buy this property? Well, there's many different ways you're going to save money, and it's mostly regarding the loan costs that it would cost you to get a new loan in your name. So, what? So here's where you're going to save. If you're just going to take over somebody's existing loan, here's where you're going to save a lot of money that you're, probably not taking into consideration. Appraisal fees. So when you are going to get a new loan in your name and there's a new bank giving a new loan, the bank typically requires an appraisal. Commercial properties may cost you a couple grand. Single family home may cost you $300 to $800 depending on who you're getting a loan with. So you are saving money with appraisals. Lenders, they rack these things up. The appraisal fee doesn't typically go to the lender, but it's a fee that has to be paid. What do they have? Doc prep fees, all this stuff. Doc prep fees, they got loan origination points. And this, if you bought a $400,000 house, let's say your loan was $300,000 and you're paying 2 origination points, that's $6,000 that you're going to have to pay to the lender just to do the deal. The doc prep fees, a bunch of paperwork, a bunch of headache, a whole bunch of stuff that you got to go through to get a loan. Depends on who you're getting the loan with, what type of loan it is. And you're going to have to pay all these costs. It's just the cost of doing business to get a loan. And it's going to take you a lot of time to get all this stuff together, answer all their questions, make sure that, they have everything that they need. So you're getting an lower interest rate, hopefully. You're hopefully getting equity in the property. You're saving money on all these costs. You can get it done quick. Did you have something? Well, that's the beautiful thing here is we're not changing over the loan documentation. The loan is going to stay in the seller's name, and we're just going to start making the mortgage payments moving forward. So you're saving time. The loan's not going to be in your name. It's going to stay in the seller's name, and you're just going to start making the payments moving forward. Lastly, is if you underwrite this correctly, and it's a good deal, you're going to get your cash flow, right? So these are the types of opportunities we're looking for right now wherever we can. And this is residential, commercial, mobile home park, storage. If we can find any deal that has something like this. Now, like the example I mentioned previously with the commercial multifamily deals that are probably in some hot water, if they have a loan that's maturing in 2024, 2025, it may be good for the next couple of years, but you're going to need to refinance again, and so hopefully, or sell it. So hopefully you're not in a bad situation at that point when the time comes, which is the situation that they got themselves in, depending on where interest rates are. So what we're talking about here, these are locked in for the next 26 years, 28 years. These interest rates and these payments are locked in. So if the loan's maturing in 2 months, this probably isn't a great strategy. However, just because you're not going to take over their mortgage doesn't mean that there's not a deal there. So you're looking for, and we've talked about this over and over. what are you looking for? These are the best real estate investments. And I understand that to some, this may sound confusing, or you're not exactly sure what the opportunity is. But here are the best real estate investments. The best real estate investments are real estate investments that have opportunity. And even better, some real estate investments have multiple areas of opportunity, or they have more opportunity than others. And so that's what you're looking for, whether it's a flip, wholesale deal, buy and hold, taking over someone's mortgage, commercial multifamily, storage, Airbnb, like someone mentioned on here, storage, mobile home parks, development, land. You're looking for opportunity. And the sooner you're able to get good at identifying what the opportunity is, the sooner you're going to be able to start making good amount of money investing in real estate. Now, again, you want to hold on to this real estate if you can, because that's where all the magic happens, and you get to maximize all the benefit. Someone tell me what some opportunity is. Comment below. What are some areas of opportunity that you should be looking for? Any responses? What are some areas of opportunity that you should be looking for? Here's a couple. So when you're analyzing deals, and you are, can you zoom in a little bit more as well? Maybe like tilt the camera down just a little bit. So here are some areas of opportunity that you should be looking for. If you're analyzing, let's say a commercial multifamily deal came across your desk, fell into your inbox, and you're analyzing it, and you're saying to yourself, well, this isn't a deal. They're breaking even. There's not much cash flow here. Blah, 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 blah. They're wanting to sell this thing at a really low cap rate. Bank's not going to want to lend on it, and then you just pass it on. Here's the thing. Most of the time, the unicorns, you're not going to see the unicorn. So most of the time when you're looking at deals, it's not going to be a perfect deal. It's not like you're going to find the best location, the best market, the best asset, all the cash flow in the world, blah, 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 blah. If you do and you have a source for these, please let us know. But most of the time, it's gonna look like it doesn't make sense. It's gonna look like there's something wrong here, and there probably is something wrong. A lot of times, the owners or the managers or whoever's operating the property, they're not doing a good job at maximizing the potential of the property. And there's many reasons for why someone would do that. The more sellers you talk to, the more excuses and answers you're going to get. But a lot of time, there's some emotional reason why they're not, maximizing the income of the property. So if you're looking at a multifamily deal and you say to yourself, well, it's a good location, property's in okay condition, it's a little outdated, they're wanting to, sell it for a 4 cap, and it's just not making that much money, and you pass on it, but you fail to recognize the fact that you can come in there, buy the property, and double the rents, and then therefore substantially increase your NOI and your cash flow. Then that's what you're missing out on looking for the opportunities. a lot of times the deals that you look at are not going to make sense, and you have to be able to ask the correct questions and solve the problem in the puzzle to figure out a way that it does make sense. So the ability to double rent would be a great opportunity. In the previous example that we were just talking about, taking over someone's mortgage that they have a interest rate of 2.75 and they got an extremely low payment. That could be the opportunity. Maybe you're finding a deal and it does have cash flow. Maybe you know of some new developments that are coming to the area that other people are not aware of. Maybe you're aware of new jobs and other things coming to the area, such as in Austin in 2020, Elon Musk and everything that followed Tesla moving their headquarters to Austin, Texas. Even though Austin was already a hot market, when Elon and Oracle and all these people started coming to Austin, or Taylor, Samsung, for example, the more you're plugged into the local market and the more you know about opportunities that other people don't know about, the more you're going to be able to identify good deals when they come across your desk that other people were not able to recognize. And that's the name of the game, is being good at solving problems, being good at being able to identify opportunity and figuring out ways to capitalize on that opportunity. So I personally, right now, we're looking for buy and hold, cash flow and deals, ideally deals that we can take over someone's mortgage on. Like I went over in the previous example, we got a few that we're looking at right now. One we may sign today. But these are great deals. Like I said, we're saving costs on a lot of things. We're coming into equity. We're going to get cash flow. We're going to secure a low mortgage payment. And it's a great deal for us. The cash on cash return on 12 to 15,000 that we're going to put down to get the property and give to the seller is anywhere from 10 to 15%. We're coming into a good amount of equity. It's all around a good deal. And if all else failed, we could just sell the house and conservatively make 5x our investment in the property. So those are the types of opportunities that we're looking for. We're looking for some multifamily deals that have good cash flow in some markets. We've got property in Llano that we got under contract right now that, again, the opportunity, anybody looking at that deal is going to rag on the deal. They're going to say, this thing isn't producing income. Sellers aren't doing a great job maintaining the income of the property and the business. Property's in good shape, but the current operators, they don't care about bringing in income, which is why they want to sell it, which is why there's opportunity. So we're looking for things that'll provide some cash flow for us. We will flip properties right now, but we're not really taking that risk just due to how much uncertainty there is in the market regarding what home prices might be 4 months from now. Go ahead.
Someone says they hear that commercial real estate is tanking right now. Is that true?
Well, it depends on what asset class of commercial real estate you're referring to, but like office is not doing too well right now. A lot of retail stores are not doing, retail owners that leasing these out to like Bed Bath & Beyond, a lot of these big retailers, they're closing their doors. So office, retail, things like that aren't doing too hot. There's, like I mentioned previously, there's commercial multifamily owners who bought properties in 2020, 2021. They secured short-term financing with adjustable rates. They're in hot water. They're going to have to sell the properties at lower values than probably they bought them for potentially. So storage is probably doing just fine. Mobile home parks probably doing just fine. So it depends on what asset class you're referring to within commercial real estate, but there is parts of commercial real estate that is not doing too hot. Any other questions? Personally, I'm not a huge fan of Airbnbs. but we're also not going to buy, mansions on the beach or mansions on the lake and try and Airbnb them. We haven't had the best. I haven't had the best experience trying to Airbnb just a normal house or, a normal fourplex in a normal market. I think Airbnbs probably are good, but I think you have to buy unique properties with unique experiences. I think that, yeah, you have the potential to make more money on a single family home if you Airbnb it. And I'm sure it's better in different places. But here in Round Rock, Austin, Georgetown, I'd rather just rent it out to a long-term tenant. We end up making about the same money with way less headache and way less, effort involved. The Airbnb, you also need to have a good manager. So if you're not going to manage it yourself, you need to have a really good manager. And there's a lot of rookie Airbnb managers out there that, maybe have done this for a month or so. Maybe they Airbnb out their own, and maybe they're good at, one thing or two things, but they're not good at managing this business. They might just be good at one or two things. And so you need to have a company, if you're not going to do it yourself, who's going to efficiently manage the entire business of this Airbnb for you. And that costs a lot of money. Most Airbnb managers charge 20%. And they even feel like that's sometimes not enough. Some Airbnb managers don't even think it's worth the amount of effort that's required to manage an Airbnb. So I think Airbnbs are good. Someone mentioned it in here, but I actually like long-term better for at least the properties that we own. But I'm sure that there's properties out there and experiences out there where Airbnbs work out really, really well. And I'm sure you make a lot of money doing it. So again, it's situational. All of these answers, all of these ways to own and invest in real estate, all of these different opportunities are all situational. So you have to look at the deal, the situation, and figure out what the best strategy is to move forward. And if you try that strategy and it's not working out, be prepared to maneuver and pivot and get a new strategy in place. Any other questions? My favorite type of real estate investment is this one right here. Buy and hold as much real estate as you possibly can. Hold on to it if you possibly can. That's where all of the benefits of owning real estate come from. Holding on to real estate for the long run. Yeah. Buy and hold. We do flip deals. We do wholesale deals. We do partner with people on deals. But we try and buy and hold as much real estate as we possibly can. If you have any deals and you want to partner, send us a DM, submit it on our website. Go to our website, teifkerealestate.com. Click investors, click submit a deal, submit the deal. We want to partner with you. We want to buy real estate with you. So please send it. We're here to help you. If you have a deal and you want to wholesale it, we're buyers. Send it our way. We'd love to check it out. If you got a deal that you want help with, whatever it is, and you don't want to partner, tell us about it. Send us an email. We're here to help. We'd love to help you work through it. We talk a lot about how we can help people make money in real estate investing, but I think one of the other main benefits to even if you just reach out and ask our thoughts on a deal is not that we'll help you make a good decision on an investment property that'll make you money, but 99% of the time you're actually saying no to deals. So we're going to help you not lose money on deals, which a lot of people make a lot of mistakes. They get impatient, they get excited, they buy the wrong deal, and they end up losing money. So just reach out to us, send us a DM, submit the deal on our website. We're here to help. On Wednesday, at 6 p.m., right? Wednesday at 6 p.m., we are going to be having a webinar, and we're going to be showing you how to buy real estate investments like I was talking about with little to no money. You don't need 25% down. You don't need, 100 grand to start investing in real estate. Make sure that you sign up for the webinar. You have to register. You can find it in our bios. Kat's going to put it in the comments. Send us a DM. We'll get you the link so that you can register for the webinar. And we will see you next week.